This is tapereading concepts. It is early May. The commodity futures markets are on fire. In this video, I'll take you over a couple of opportunities I took within the first two trading sessions of the month, and I'll explain the contextual build-up, placement, rationale, and management perspective for these opportunities. We walked into this month here, Sunday night being the 1st of May, after a bearish session from late last week on Friday. You can see that the orderly buying here that the market maintained within the morning session eventually gave way to relatively steep sell-off, which led to a close well below the overnight lows from the session. The beginning of the week led to an indecision and oscillation around the closing price on Friday. You can see the actions and reactions that we're getting on both sides of this closing price. Moving into the European session, a slight bearish bias develops as we get slightly lower lows and lower highs. Ultimately, as the market manages to break the low and extend to thin air, this is where I build this frequency here, showing me the axis around which the market is potentially rotating, with the entire action here before the European session being above and the consequent reaction being below. Moving into the US pre-market here towards 7 o'clock a.m., we see a consolidation at much lower prices with a ceiling just around $102 per barrel. I observed that since the market is moving on a slope, it is possible that the sellers are moving the offer slightly lower with each consecutive push, looking to extend the downward move towards $100 per barrel, which would be the psychologically relevant number in this case. We do see further follow through within the US pre-market, and this sentiment is in agreement with what has already happened within this session, especially within the European portion. It seems there's a marked deceleration here, since the descent in price here is not nearly as intense as it was initially from this higher upslope, downward sloping coil into this horizontal balance point, which was right around 101.50. In the early morning hours here in the prime time for us in the US, the market starts building up slightly higher lows here, which is interesting, having in mind that we are pressed here within a relatively narrow range from the sellers as well. This finite balance structure, or symmetrical wedge, gives us a very good reference point for the rhythm with which the market should eventually extend, whether to the upside or to the downside. And the development here happens within the prime time or the post 9:30 a.m. Eastern time into the US session. We get a very strong move to the upside, which in one move manages to break all the reference points that we have been following, including the horizontal door here created by the sellers at 102, the downward sloping sequence here in the compression, and of course the earlier center line reference point that was created from the first portion of this Sunday over Monday session. We did get lots and lots of strength and even a little bit of follow through here after the hesitation, giving us good clearance, or what we call fresh interest, aggressive buying above previous levels that the market found as good resistance. This creates an immediate opportunity for me for a change in sentiment. This is a market that has been looking for a low, found a low, and now has found aggressive buyers, which suggests that we could experience a mean reverting move all the way up towards where the overnight highs were. There's a significant reward here on the table, and the question is how to position for such an opportunity. Since the market had a very intense reaction here, my initial impulse is to get into an aggressive entry and give the market a chance to extend the gains here in a relatively steep directional fashion. That is why on the counter directional move, or on the discount, I'm looking for the first slowdown and I'm looking to get positioned there. The placement rationale here is based on the oscillation around this frequency. So I'm looking for a reaction that is of relatively equal size here below the line, where I expect that the buyers will stabilize price and send it back to the upside. You can see these three bars which lead to that buying spurt, and I'm looking to buy the discount here with a stop that is local, meaning I wouldn't be willing to take the risk all the way down below where the established buying interest is. That is too much risk and it would lead to an unfavorable reward versus risk situation. Therefore, I'm applying what's called a local stop, or looking for a relatively small buffer here. You can see that I'm using a 30-tick stop, looking for roughly half of my stop to be below the reference point, which is this edge. This is about 15 ticks. And in this case, just within a few bars, the market says that this is not where the continuation will be given from, if at all. Now, on the way down, I'm looking for further reference points as to where the placement would make sense. I expect that previous resistance will likely become support here, and this downward sloping area of resistance is a good candidate. My 40-tick stop here, slightly larger, would be positioned just along this upper sloping line of support. And while this is less than ideal, and in my experience, if the market breaks back inside these wedges and fails to respect roughly the middle as support, then it's unlikely that the bottom will offer any better of a chance of surviving this opportunity. In other words, I would just be wrong and wouldn't expect to maintain this bullish sequence anyway. I do get positioned here on the backside of this line. Pretty good price here, just underneath 101.20. Notice good 70 ticks lower than the initial entry. This market offers tremendous volatility. On a 40-tick stop, my perspective here for a rotation back towards the top offers tremendous reward versus risk. All that we have to do right now is follow how the tape formulates here the potential sequence of higher lows and higher highs. Lucky for me, the market stabilizes here on a very peculiar cluster, and this is, notice, a marginally higher low than the initial slope that we had here. So it appears that the buyers are indeed stepping up their game and looking to buy at a much higher levels relative to the initial speed. So the convincing bullish sentiment is translating not only into a new high, but also into a significantly higher low. This opportunity works out fortunately for me, very, very quickly. And the market, for all intents and purposes, zooms through the prices that it zoomed in the beginning of the session or during the European portion. Here you can see the vertical movement down and then the vertical movement up, in effect locking this entire US pre-market and regular session as an island formation to the downside. Very, very steep movement. I was looking to get out of this opportunity at a place where there's confirmed selling interest. This is where the sellers took control of this market in the far eastern portion of the session and then confirmed this interest into the European portion of the session. So this is a safe and logical exit for this opportunity, even though it's possible that the market will follow through higher. But it is Monday. The context is still relatively local, and I'm looking to start the week strong. For that matter, start the month strong as well. The exit here is just underneath $105 per barrel, managing to capture, what's the outcome for this one here? Yeah, just about 360 ticks, or a 9-to-1 reward for the risk of 40 ticks taken down here on the backside of this frequency. What followed here by the end of the session is more buying, quarterly buying, definitely less steep character here. You can see that this is orderly buying and at a much slower pace. Ultimately, the market did manage to go full 100 ticks or $1,000 per contract higher by the end of the session, but ultimately by the close of the session, it managed to come back to prices. You can see here where the close was, very close to my exit with this opportunity. Following into the Tuesday session, we do see orderly pullback. Initially, the market zooms back below the Friday close, and at this point, the fib retracements between the bottom and the top of this entire day's range is what I'm using for reference points to see whether on the larger scale the buyers are migrating from these levels potentially somewhere to these levels. By the US pre-market here at 7 o'clock, it appears that there has already been a bit of buying interest here around levels that I'm interested in, but it's nothing conclusive, so the market seems to be in a very orderly fashion here, offering lower highs. And here we see nothing more than a two-wave pullback, so definitely not enough to attract me here as a buyer to the table. Further into the session though, as the US pre-market rose in, you can see that we form a double bottom here as the market fails to extend to lower prices, and there's a bit of intense migration of the bid to higher prices. All that is left to see is whether the market can actually take out a certain high, which would suggest that the buyers are indeed in control. And indeed, we do get a little bit of fresh interest here, high-ticking the previous drive from these levels. This suggests indeed that there might be some amount of accumulation just around 103.50 price-wise. On the way back down, the sellers do try to press through the bottom. You can see that there's a very orderly sequence of lower highs here, and ultimately the market manages to break this double bottom, extending in a very steep fashion down into this zone where usually the bid will migrate if the buyers are still in control on the larger scale. And indeed, we see here a very textbook V-shaped reaction, which in combination with the already established reference point here at the bottom suggests that indeed the discount or the further push to the downside is getting bought up aggressively, which confirms the bullish interest in this market. So the question is, where are the buyers looking to take this market? If this is a significantly higher low, it's likely that we're going to make an attempt on the top. Now, an alternative hypothesis here is that the market is once again hugging the Friday close, since we didn't manage to hold on to the gains from the previous session. You can see that for the most part, this episode here is equally balanced around the 104.11 price where we closed on Friday. And this is really a working hypothesis inside this session. You can see that in the US pre-market portion, we have seen a drive up, a drive down, and a return once again back to these levels. As the market pushes through higher, I'm looking to exploit this momentary oscillation by looking for a short idea close to the top of this current range or oscillation. Now, I expected a relatively sharp reaction here from where the high was previously, and for all intents and purposes, you can see that I'm framing the market as a box. There's the bottom, there's the top, with a couple of small pivot components here created by the fresh interest here and the V-shaped reaction bottom just underneath $103 per barrel. I'm expecting an inside move or a rotation to the downside, which here I can afford to test with a relatively modest risk. You can see that a stop of modest size here, about 30 or 40 ticks, allows me to capture still significant reward if the market rotates safely only to the bottom of this coil. Of course, trading against this latest development here with the V-shaped reaction carries an inherent risk, but my observations are that when the market is roughly in the middle, testified for by the 50% pullback here, there's often oscillations, and here the oscillating behavior is confirmed by the actions and reactions around the closing price on Friday. So timing breakouts or continuations here is much harder than looking to fade the extreme and trade for moves inside this structure. My initial entry here, even though I was happy with the price, is indeed met by some persistent buying here, and I assume that my timing might not be ideal and I might be stepping in front of a very strong market. So on the way down, I decided to take a graceful way and see a little bit more confirmation at the risk of missing this entire move. You can see that after the market holds a higher low, the next deliberate drive up is the one that should solve for whether there's indeed consistent selling pressure here or whether we're going to find higher prices here above the previous pivot component. You can see that as the market drives up, the V-shaped reaction here is incomplete. Similar to here, we have a V-shaped reaction, but while here we find the higher price, here we do not. And that's enough information for me to conclude that indeed the mean reverting hypothesis is of better quality. You can see where the selling pressure is. If I can get positioned with a stop just above these levels, then I should be safe if the market intends to rotate back towards the bottom. I do pick up the opportunity here, slightly lower than the initial entry, but the confirmation in this situation was worth it for me to take the chance. The market didn't move outside of this structure right away. You can see a bit of a fist fight in this compression, but ultimately the sellers do win here this skirmish. Indeed, we moved through lower prices, momentarily slowing down in the middle of this coil, which is again the Friday closing price, and ultimately extending to the downside. Now, maybe a little bit of greed moving in here, maybe liking the parabolic collapse of the price action here. I did initially wait to see if the market will be able to get through this door and extend right away back towards the place where the buyers found the value here on Monday. So my exit was not here, the order waiting quality. I did allow the market to show me what it wants to do here at the bottom of this coil, since it didn't appear that there's significant buying interest at these previous lows. A little further down though, you can see that the market did find a bit of buyers, and since this is still a higher low, I return back to the original hypothesis, which is to take the profits here on an inside swing just above this level. So on the next drive to the downside, I did take my profits. It didn't happen to be better decision within the context of this session. You can see that even though the market stayed here for a while, we didn't really get another rotation to the upside, but I was looking to be relatively conservative and take the profits inside this swing or inside this box originally. So sticking to your plan usually tends to pay off, since after placing in an idea, between fear and greed, you will often come up with inferior impulses as compared to the ones that you had as a plan initially when you were plotting the opportunity. You can see that the market indeed managed to extend the losses in price here further lower within this session. So had I stayed in this opportunity patiently, notice here these couple selling clusters that happened just underneath $104 per barrel. I could have had significantly more profits here as the market moved to lower levels on the curve. Ultimately, however, the market didn't stick to the lowest prices. You can see that the closing price here at the end of the session is 103.53, which is higher than the one that I picked up for my exit. So it really depends on how late I would have stayed in this opportunity as to whether I would have been able to capitalize on more profit or eventually end up giving it back here by the end of the session. One peculiar observation I want to bring to your attention here is these tiny bars which are happening just before 2:30 Eastern time, since this is what is habitually considered the end of the regular session for crude oil, or the time at which the majority of the speculators look to terminate their intraday positions. These high activity bars here suggest that there might indeed be, especially since the qualities of higher lows, higher highs, and higher closes for the most part, it suggests that indeed we might have found the bottom here at this triple bottom above 102, and it is likely that I would have terminated the position somewhere here had I held this short further down the curve. Notice that the difference between this exit and somewhere down in this coil is another good 80 something ticks, which is about 50% more and then some on top of the profits that I had already materialized. I do, however, prefer to get in my opportunities generally relatively early and stay in them to allow them to work out through the initial phase. I'm also relatively quick to take profits if the market gets to a logical place. This is really the quintessential mentality for intraday swing trading, which is what this approach teaches. Ultimately, I ended up within the 2 sessions with just short of 500 ticks, which is $5,000 per contract in the crude oil futures here, enjoying some mean reverting volatility here and relatively local premises between Monday and Tuesday, trading pretty much the reversion back to overnight highs and then the reaction inside a balanced motion here around the Friday close on Tuesday. Ultimately, the market did manage to find higher prices within the week and extend up towards the highs from Friday and beyond. But this is all that I was looking at to participate with on Monday and Tuesday following the Friday session. Let me know if you like these opportunities. Let me know if you have any questions in the comment section below. Like, share, and subscribe if you enjoy the content. This is Tape Reading Concepts, and I'll catch you in the next video.